Welcome to my channel. This week we are going to discuss about the broader market perspective, the leading sectors, lagging sectors, and two new theses with respect to Indian market where we are going to see a broader or weaker monsoon, and also how it is going to impact the ethanol production and the returns generating out of it, and with the stocks which are going to get impacted because of this. Stay tuned. Moving ahead to Nifty Total Market returns over the week, we can see that we had very good trading days of 4. Out of that, we have generated a returns of 1.84%. And we had one weaker session on Friday, that is with minus 0.45%. But apart from one particular day, the broader market is still holding good. And Nifty Total Market returns are pretty much solid for this particular week, and which is reflecting clearly on the charts. In the charts, we can observe that the Nifty Total Market returns is about 200 days moving average and 50 days moving average very comfortably. And also we are on the verge of breaking the highs which were made in the month of May, which shows the broader market strength. Apart from that, the leading sectors have remained the same in the market with respect to Nifty Private Bank, Nifty Microcap, which has clearly showcased the strength, Nifty Mid-Small Health sector, and the Pharma, Metals, Energy, Nifty Healthcare, and Nifty India Defense. The sectors which are leading in the current market remain same, and there is no change in the current situation. And the lagging sectors also remain same more or less. We can see that the IT, which was beaten down pretty badly, again auto, Nifty India Digital, Realty sector, even the Nifty part that with respect to the large caps, finance, PSU banks, all these are kind of pretty much holding back the market, and this is not something great, especially the FMCG sector. Now, there is no change in the leadership altogether at this point. We would continue to hold on to the same ideology in the coming days. My next thesis with respect to India is with respect to El Niño and the ethanol blending in the energy sector. Let me decode it. So basically, there are two forces which are shaping Indian markets. One is with respect to monsoon crisis, and the other one is ethanol revolution. And we don't have control on monsoon crisis, to be honest. Our government definitely has control on ethanol revolution. Let's focus on the rainfall deficit. Currently, because of El Nino, we are facing 38% rainfall deficit in India, and the government has set a target of mixing 85% of ethanol in the fuel by the next upcoming year 2030. So let's see how it is going to turn out for India. Now, moving ahead with the monsoon crisis, one thing what we have observed currently at this point of hour is the monsoon which was supposed to enter India has delayed. As a result of it, the crisis has started unfolding. Now, India is facing 38% of deficit in the rainfall, and especially the central India, which is facing 62% deficit. And let's see how it is going to impact and what are the reasons which are causing this. I'm trying to showcase the reasons over here. One is El Nino, the other one is there is no low pressure system which is being formed in Bay of Bengal. Now, what is El Nino? El Nino is basically a natural phenomenon or a weather phenomenon which occurs in the region of Pacific Ocean, which causes the ocean surface temperature to be warmed up, and that hampers the overall or the global weather systems. As a result of it, the current water moves within the oceanic region will be disturbed. As a result, the wind pattern will be affected. That is one of the prime reasons why there is no low pressure system which is being or which was supposed to form in Bay of Bengal region. As a result of that, India is facing rainfall deficit. Since this entire phenomenon is absent at this point of hour, we are facing a deficit. Which are the regions which are getting affected? I'm showcasing the map of India where we can see northwestern part of India is having surplus. Don't be misled with it because the amount of rainfall northwestern India is facing is pretty less. This is clear-cut comparison from the past year June to current year June. So the year-on-year comparison clearly tells that Northwest India has not yet faced the rainfall. But the regions which were supposed to face the rainfall, like Southern Peninsula, Eastern Northeastern part of India, and the central part of India has the rainfall deficit, which is the biggest concern at this point of hour. Now, what is going to happen if the rainfall is not there? See, India is primarily agriculture-based economy. As there is no rainfall, we will not be able to sow the seeds Kharif season, because Kharif is the primary point or the prime season where farmers will sow the seeds. As a result, the products will be produced and the same products will come into the market, and this is how the economy is completely cycled. If there is no products or the produce which has to be sold in the market, then there is no economy left. And as a result of this, the Q2 or the quarter 2 or the quarter 3 earnings in rural India will be definitely hit. See, now we'll try to see which are the sectors which are going to get impacted because of this. There is clear-cut negative impact as straight far as like I can see is the agrochemical sectors and the seed companies are going to be definitely impacted. And which are the sectors which is going to get affected as tractors or the farm equipments and also the rural FMCG part. The companies which are performing well in the rural parts of the FMCG, they are going to get affected. And in turn, the microfinance companies or the NBFCs, they are going to get affected. Their earnings will be hit. And what are the other sectors that are going to get have or could have an impact is the sugar companies, power utilities, because whenever there is low amount of water in the reservoirs, the power utilities companies like NTPC or any other company for that reason in India, they will have good amount of challenges which has to be resolved in shorter duration. And the next part will be the edible oil importers, wherein domestic deficit raises the import demand. Basically, lack of product produced in the country will force the companies or the consumers to import it from other nations, which is again a burden on India. And which all sectors will get impacted in positive sense? I would say the irrigation of the pump sector, because when there is no water from the rain, definitely we try to dig into the ground. So companies like Shakti Pumps or Kirloskar, they could be having positive impact. So this is clearly not a buy or sell recommendation. Please do your own due diligence or analysis. This is just a thesis, and I'm trying to build my own conviction on top of this. Now, the other part of sectors is the urban FMCG, because by default, when the rural parts are going to underperform, the urban sector is going to be benefited because money will definitely move rural part of the nation to the urban part. As a result, the banks or the NBFCs will try to push more from the urban sector, and that's where the business or the economy will be boosted. And now the other part is like the grain distilleries. Wherever they're storing the grains, those are the spaces where there will be good amount of benefits. And that is the space of the business which is going to grow stronger in this coming time. Now, coming to the second part, which is the ethanol revolution. See, already India was under the impression saying that E20, that is ethanol 20, has already gone live since April 1, 2026. As a result of that, currently we are in a situation where we are using 80% oil plus 20% ethanol in our regular biking or bikes or cars or any kind of vehicles we are using. Now, India is next targeting 85% of ethanol plus 15% of oil, which is a huge jump or huge shift in altogether. Now, what is the benefit over here? See, this is going to increase the income for farmer from E20 blending currently at this point of hour. That is around 40,000 crores is being pushed towards the farmer side. Now, for respect to Forex, where we are not supposed to import the crude oil, we are going to reduce 43,000 crore rupees per year on a Forex, basically foreign exchange, which is going to help us a lot or boost the economy a lot. And the timelines, we are going to be early by 5 years. Ideally, the target was set to be in the year of 2030, but the government is pushing for the faster revolution or the faster change. And let's see how it is going to change or what are the sectors which are going to be impacted because of this. So as I mentioned in the past, 2015 was the time when we started with the ethanol blending of 5% ethanol. 2020 was the time during the COVID when we had set the target of 10%. 22 we moved on to 12%, and in this 25 we have hit ethanol blending of 20%. Now, since E20 has been mandated, next target is E85. Now, what is going to happen over here? I'm not going to go deeper into the part of like which are the products or what kind of products are going to be coming into the market, but I'll be seeing the impact because of the existing product here. Now, E20 has clearly given a signal saying that whenever there is a mileage drop with respect to the vehicles which is bought before 2023, that is the sector which is getting impacted majorly. So consumers who are using those products which were bought before 2023, that is BS4, those engines are getting impacted heavily. And there is good amount of challenge for the new consumers to buy the newer products. Now, as a result of this, there will be new set of products or engines which are going to come into the market, and consumers will have to spend more on the auto segment. And let's see how this is going to get impacted again in the layer level. Now, coming to the ethanol part, basically the fuel. We will be extracting ethanol from sugarcane, maize, rice, and the sweet sorghum. And this is going to be passed on to the distilleries where we are having stocks like companies like Balrampur Chini, Triveni Engineering, Dwarkesh Sugar, EID Parry, and Piccadilly Agro. And who are these, or how is this benefits going to get passed on? It is purely with OMC contract. So basically, OMC contract are nothing but the companies which are going to sell the oil in the primary market, like in petrol bunks, like IOC, BPCL, or HPCL. And they are going to have the pricing power, but again, it is being monitored by the government. So they are going to definitely have the profit share, and that is where the actual takeaway will be looked upon. Now, that is how the entire cycle is being tracked. Now, over here, what is the key metric to track for us is the ethanol revenue as percentage of total revenue. Basically, let's say if the company is earning 100 rupees, out of that, what is the percentage or what margin is being brought by ethanol? That is the space where we can see the growth clearly looking upon. And companies which are having 30% or more ethanol mix are the cleanest place. That would be my best bet in this current market. Now moving on to the layer 2, wherein we will be seeing with respect to OEMs, with respect to vehicles, we will be seeing the impact on Maruti Suzuki, TVS Motors, Hero MotoCorp, and Bajaj Autos. These are main players. Again, this is not a stock recommendation. This is the space where we can see the impact which will be clearly visible. And what is the other parts which other companies which are going to be benefited is purely auto ancillaries. They are the companies which are producing the spare parts for the primary OEMs here, like Samvardhana Motherson, Endurance Technologies, or fuel pump manufacturers. We can go through the content clearly, which is laid out here plain. And this is how the impact will be transitioned. And these are the segments or the sectors which I'm going to track very deeply. And wherever there is clear-cut price action, I'm going to invest my money over there. Now, what is the primary catalyst or the notification which I monitor from the government's perspective is the E85 notification of Central Motor Vehicle Rules. Basically, that is nothing but the company or the governments which are going to mention saying that when or by what time these E85 vehicles are going to hit the market and what is the timeline that the consumers are supposed to comply with these rules. This is how the investment will be tracked. And I have a critical connection over here which is going to cause a concern to me. See, the current monsoon failure and the ethanol ambition are on a clear-cut collision course. On the one side, I am observing a weaker monsoon. As a result, there could be an impact on sugarcane crop. Again, because of this lower kharif output, we will be facing food security pressure. This is going to squeeze the income of farmers. And on the other part, government is pretty ambitious. They want to drive the E20, which has been mandated in April. E85 draft is already ready. Distillery capex is rising, and OMC are already lining up to blend their contracts. What happens in between this? See, in the year of 2023, we did have that situation where government literally intervened and they had to moderate the blending targets. Basically, blending nothing but ethanol plus oil mixing. That blending was put on hold. What was the story behind that? And what is my clear concern? Let us move into that part. See, in the year of 2023, India did have a rainfall deficit by 6%, similar to El Nino. As a result of that, sugarcane crop was down by 55 megametric tons. So, as a result of that, sugar prices did definitely surge up, and export ban was extended. And as a result of this, again, government had to ban the cane juice for ethanol, and the blending rate was reduced from 12% to 10%. Could you identify the change in policy here? There was a change in blending rate. So how it is going to work, or how is it going to impact the companies straight away on their revenues? We did mention that we have to monitor the key metric wherein we are observing the key percentage, that is percentage of revenue from ethanol in the overall total revenue. This is where the revenue will be hit. As a result of that, we are pretty much concerned if the play which happened in the year of 2023, if it is going to play out in 2026 again, this ethanol play is going to be hit pretty badly. That is my biggest concern. As I mentioned again, if the government intervenes, there is very high chance that this ethanol play will not be a single-sided bull market. It will be a roller coaster play. It will be pretty much challenging. It is very difficult to adapt. Now, what are my priority signals which I'll be monitoring in the coming days? One is the Kharif sowing data, especially with respect to late June and July region, and also the rainfall patterns, which I can monitor directly from the IMD website, the reservoir levels, which will be monitored every single day, and the El Nino index. And on the other side, with respect to ethanol, as I mentioned, E85 notification from the Road Transport Ministry. I'll be monitoring that. And also the blending roadmap with respect to 2027 and beyond. That is primary concern. Sugarcane area zone. See, that is also a primary reason. And again, the impact will be from the monsoon. That is a very key driver over here. And in the end, the kind of contracts OMCs, oil marketing companies, are going to have with the ethanol producers. This is how the entire ethanol play has been linked. It is purely highly regulated space. Please do think of coming to a conclusion before investing over here. Thank you all. Thanks for watching. Stay tuned.